Good evening, everyone.
Good evening, sir.
Good evening, sir.
Evening, sir.
So today I am just next to Shadisa's car. Okay. Can we start? You can see my screen?
Yes, sir.
Yes, sir.
Okay.
Yellow car.
So,
Yes, sir.
right. Okay. So we are discussing today about yes, we know that. So we are quickly going to, revise the entire portion of GST which is applicable to you. Uh, First thing before we start with the syllabus also is that we have to do a little bit of smart studies. See, before we start the class, we say that we have to know everything. It is for knowledge. But now when we are preparing for examination, it is no longer just the knowledge, but we have to also ensure that we do smart work to ensure that we cover all the portions which is relevant for our examination. So we'll have to do a little bit of smart work also. So when we have to do smart work, we have to first go to the study guidelines and see what is not applicable to us. Okay, what is applicable to us definitely we have to read, but what is not applicable to us also is equally important to us, so that we don't waste time on what is not to be covered by us. Now, what is not covered, not required to be read by us? One is rate of taxes, both for goods and services. The study guidelines itself says that if there is any rate of tax to be given, they will give the rate, whether it is 28%, 18%, or 5%. RCM for goods not applicable. RCM for services very very important. Every question which is asking you to compute the tax liability will have an element of RCM. Okay, so very important. Exemptions very very important as far as services are concerned. Goods not at all applicable. Now in the classroom also I have been telling you that when we talk about exemptions for services, always concentrate on important criterias: government services, education services, hospital services. Okay, then try to find out those exemptions where there are exceptions. Okay, so if you observe in your RTPs also, majority of the times the question is on, can umpire getting money from the BCCI be liable to tax or not? Okay, because the exemption has been given to players, coach, etc. Right, so try to find out exclusions. Lot of questions in exemptions are asked from exclusions. Residential property given for residential purposes is exempt. Residential property given for commercial purposes they have not given. That means it becomes taxable. Right, now education services by or to education services to student is exempt. Education services by a particular educational institution which is not recognized by law, there is no exemption. So try to look at exceptions, because a lot of questions are asked on exceptions. Third way of preparing for exemptions is that try to see if there are any threshold limit, like residential welfare association up to 7,500 rupees is exempt. That means definitely they can easily ask you a question on whether monthly contribution up to 8,000 rupees is taxable or not, or exempt. Okay, or ticket for entertainment shows up to 500 rupees is exempt. So the question will be 600 rupees is the ticket, is it exempt from tax? So wherever there is a end user based exemption, or wherever there is a threshold based exemption, it is very easy to ask questions. Remember those exemptions, right? Okay, now quickly let's go to what else is not applicable. Distinction between intrastate supplies and interstate supplies is very much there in your syllabus, but how to decide whether a supply is intrastate or interstate, that is not there as part of your syllabus, because IGST is not applicable to you. Valuation section, that is section 15, is applicable. Valuation rules, if section is not applicable, how to value, that is not applicable. Okay, ITC related to real estate projects is not applicable. ITC related to any other thing is definitely applicable to you. Okay, online information database access retrieval services not applicable to you, even if it is part of the mandatory registration under section 24, not applicable for your syllabus. Input service distributor, how we distribute the credit, whether registration is required or not, how do we move CGST, SGST to IGST, all that not applicable to you. Okay, TDS and TCS from GST, I am talking only about GST. Don't think that TDS, TCS for income tax I am talking. This is only for GST. So if TDS and TCS for income tax is there, please read. Only GST it is not applicable. Section 51 and 52 is not applicable. Job work related, transactions or sections not applicable at IPCC level. Okay. Now just let's look at the question paper pattern. How does it look? Okay, we should not be surprised on the day when the exam paper is given to us. We should be a little aware of how the question paper is going to look. Question number 5, is compulsory. It is for 8 marks. What happens to question number 1, 2, 3, 4? Our sir is going to take care of that, right? Okay. Question 6, 7, 8 of that you have to answer to, and in these questions also there will be an internal choice. So we'll always think valuation I will skip, input tax credit I will skip. Correct? It is not that input tax credit will be one of the questions. Whichever question is easiest, the topic which we don't know will be a option, internal choice in that. So life will be miserable for us. Don't skip any topic because there are internal choices as well as external choices, so be careful about it. That is 20 marks. And then 12 marks is mcqs. Okay, so 12 marks is mcqs. 12 out of 12 you can easily get. But these mcqs, if you observe, we have not seen mcqs in the examination, but what I hear from the students is these are not just tick the answers. Okay, there might be some computation also involved, and based on the computation we might have to give the answers. If you look at the RTP also, a big lengthy question is given, and there are 4 sub questions to it, and we have to answer those four sub questions based on the main question, right? So mcq is not just going to be tick, it is an analytical mcq which is going to be asked. Okay, now how do we handle these mcqs, right? How do we handle the questions of mcqs? Very simple strategy. Whichever you think is totally off the mark, eliminate that. So out of 4, if according to you the tax is cgst sgst, it cannot be igst at all, and the option given is 2 or CGST, 2 or IGST, eliminate IGST. Now you have to break your head on only 2 options. Correct? So that is the most easiest way to handle the MCQs. Second, read the question till the end. Even if we have solved the same question, even if the RTP has given the same question, right? But the question at the end, the expectation might be completely different. The question might say, what is the tax payable? What is the net tax payable? The difference between tax payable is output tax and net tax is after input tax. Okay, or what is the tax payable by cash? So output minus input, whatever is the balance, plus RCM, that is the amount I'm required to show, right? So please read the question till the end. Even if you have solved the question 2 minutes before the exam has started, please read it till the end and understand what is your expectation. Okay, next, wherever there is a 2 things which are possible, the question has not very clearly been framed. You can assume it this way also, that way also. Okay, or there is a issue in the provisions itself. We have in certain cases like capital goods reversal, we have seen there are 2 methods. One is based on quarter method and one is based on monthly method. So there is a issue there, right? In those cases you can give a assumption that I am presuming this is the tax which we have to apply. Or ocean freight, when we discussed about reverse charge mechanism, there is a high court decision that ocean freight is not leviable to tax. So there you can give an assumption or you can give a note because there is an issue with the tax position itself. But you have a doubt in your mind, that time don't give assumptions. Assumption is required when there is the law which is not clear or question which can be interpreted in 2 different ways. Okay, fourth point, always if the question does not say that the values are including tax or excluding tax, it would be better to consider it to be excluding tax because computation becomes easy. But that does not mean that you can assume it is excluding tax. Please read the question carefully to check whether these values are including or excluding. And if the question is not clear, you can make an assumption that all these values are excluding tax. Okay, we have read the sections. There are a handful of sections. We will go through the sections today also. Wherever possible, quote those sections. Okay, and provide reason. So how do you answer a question? If a question is given, you don't have to spend time giving the facts. Okay, don't give the facts, but what is your understanding, what is the legal provision, and what is the implications because of this legal provision? That is how you answer. So the case, the legal provision, then the implications because of this legal provision. That is how you will have to answer the question and then give your conclusion, whether it is taxable, whether he is entitled to composition scheme, whether he is not entitled to composition scheme, whether the rate of tax is 1% or 5%, right? Okay, now very important about setting off between C, S and I. Please remember that I will go with I, then in C and S, whatever proportion you want to, right? Then C will come, C will go against C, leftover will go to I. S will first go against S, leftover will go against I. So the mantra here is first make I 0. Only once you have made I 0, you can go to C and then you can go to S. You're able to follow? I against I, anything left over will go to C and S. Ideal proportion is 50% to C, 50% to S. C will go against C. Leftover, if you have any I liability, will go against I. S will go against S. Anything left over will go against I. Right? RTP has few circulars. I will try covering those, but please go through those circulars. Those are very, very important circulars which have been issued recently. And I have seen the particular trend is that they ask a lot of questions on circulars, because as of today, there are not many case laws which have been developed in GST. It has been recently issued, released, right? So there are not many case laws. So directly questions are asked on circulars. Okay. Now this is the question paper pattern. You will observe that questions are being asked left, right, and center on everything. But where is the focus majorly is on exemptions. If you observe here, in January, there is no question, there is a 10 marks question on exemption. Okay, so that means in your examination, there may not be a question on exemption, meaning we have to do a little bit of smart work. But if you observe, first they ask questions on exemption, then they've not asked the questions on exemption, and suddenly in January they've asked 10 marks question on exemption. Okay, likewise, value of supply, they have asked a question of 8 marks, and registration they've asked question of 10 marks. But there was no question on composition scheme. There is no question on input tax credit. So my guess is, and it is only a guess, okay, my guess is questions this time will be on composition scheme. Questions this time will be on time of supply. Questions this time will be on input tax credit. Right? It is a calculated guess, but I am not sure if I am correct on this. Right? Okay. Now, how do we remember the provisions? Very, very easy. Three-step approach. Even in CA, we have a three-step approach: foundation, inter, final. Even in IPCC, when we are reading GST, we will have to, or inter, when we are reading GST, it is a three-step process. Supply has three parts: supply for consideration in the course of business, 71A. 71B does not have B, so supply for consideration, import of services. 71C does not have C, that is consideration, supply in case of schedule 1. Okay, that is how we read the section. Section 9 is the charging section. 9.1 forward charge. 9.2 no charge on petroleum products. 9.3 special circumstance reverse charge. Okay. Then we have input tax credit. Same formula. When can you take the credit? 16. When you cannot take the credit? 17. Special circumstances? 18. Right. Time of supply goods, section 12. Services, 13. Change in rate of tax not applicable to us, out of syllabus. Right. Place of supply, 10, 11, 12, 13. Luckily not applicable to us, so we can forget this also. Right. Place of supply notification, sorry, rate of tax notifications, goods, 1 of 2017, and exemptions, 2 of 2017. Services, 11 of 2017 is taxable, 12 of 2017 is exempt. RCM is 13 of 2017. What you have to remember now is services. 11 of 2017 taxable, 12 of 2017 exempt, 13 of 2017 is RCM. These three notifications you please remember. Right? Okay. Now let's go to our conceptual learning, okay, of small topics. Goods, because GST is applicable on goods and on services. What is goods? Anything which is movable is goods, but it does not include money and securities, but it includes actionable claims. If you go to schedule 3, betting, gambling, and lottery are the actionable claims which are liable to tax. That means actionable claims are goods, but all actionable claims are not taxable. Only betting, gambling, and lottery is taxable. Everything else is excluded because of schedule 3. What is service? Anything which is not goods is service, but it also excludes money and securities. That means money and securities is neither goods nor services, but use of money or use of securities for which consideration is charged. Example, loan is given for which processing fee is charged, that is taxable. Some money is given for which interest is charged, is taxable, but there is an exemption to that. Okay, credit card interest, there is no exemption. Is this clear? Right? Okay. Now, petrol and alcohol not liable to GST. It is specifically outside GST. Right? Schedule 2 says, I will tell you what is goods, what is service. Okay. If you look at what is goods, sale of goods is goods, but renting of the same goods is a service. Example, sale of car is goods, but renting of car by Ola to us is a service. Sale of laptop is goods, but renting of the same laptop will be a service. Renting of immovable property is service, but sale of immovable property is not liable to tax at all. Working on somebody else's goods, which is job work, is service. Personal use of business asset is service. Transfer of intellectual property, including software, is service. Obligation to refrain from an act or to tolerate an act. If somebody is doing something and I'm tolerating it for which I'm getting money, that is also is a service. Supply of food and beverages is a service, right? Construction of a property is also a service. Construction and sale of a under construction property is taxable. Construction and sale of a completed property is immobile property. Schedule 3 says these transactions are not at all taxable. What are those? Services by employee to the employer in the course of employment. But employer to employee is taxable. Gift up to 50,000 rupees is exempt. 50,000 rupees gifts given by the employer to the employee is taxable. Services by court or tribunal, tax exempt. Functions of MP or MLA, not taxable. Funeral, including transportation of a deceased to the crematorium, is not taxable. Transportation of a patient to the hospital is exempt. Please understand the difference between not taxable and exempt. Land and building after OC we discussed, not taxable. Betting, gambling, and lottery is taxable. All the other actionable claim, not taxable. Goods sold before customs clearance. Any permutation and combination, if goods are not entering into India or I'm not filing bill of entry for home consumption and sale happens before that, it is not liable to tax. Okay. Now, in case of composition scheme, these goods are not, you cannot opt for composition scheme if you are dealing in these goods. What are those? Pita, pan masala, ice cream, tobacco, and aerated water. Pita are the goods on which you cannot opt for composition scheme. Even for the 20 lakhs limit getting extended to 40 lakhs, specified goods are excluded. What are those specified goods? This Pita are the four goods which are excluded, right? Okay. Now supply. Again, three sections. We discussed that. What is important? Schedule 1. Permanent transfer or disposal of asset, transaction with related parties, import of services from related party, transaction between principal and agent. These four transactions, even if there is no consideration, I am required to pay tax because it is part of schedule 1. Any other case, if there is no consideration, I am not required to pay tax. Like I gave gift to somebody who is not at all related to me. If it is related, it becomes schedule 1. If it is not related, I am not required to pay tax at all, right? Okay. Then we go to input tax credit. Very, very important chapter. Now I can take credit on anything which is used or intended to be used. In income tax, depreciation is available only on those assets which are put to use. But in GST, you can claim credit even on those assets which are not put to use, but which are ready to use, right? Okay. What are the conditions? I should be a registered person on the day when I receive the invoice. I should have a tax paying document in the form of a tax invoice or or a bill of entry in case of import of goods. Then I should have received the goods or services. Only then I can take the credit. Okay. Tax should be paid by the supplier. I should have filed the returns. How to ensure the tax is paid by the supplier? It should appear in my GSTR 2A. And if it is not appearing in GSTR 2A, 5% extra credit is given to me. Of whatever is appearing in 2A multiplied by 5%, I get extra credit so that next month when the supplier file the returns, I get only 95% credit. Okay. I have to ensure that I make the payment to the vendor within 180 days. If I don't make the payment to the vendor within 180 days, I have to reverse the credit along with interest for those 180 days, right? The time limit for claiming credit of any invoice for that financial year is 6 months from the end of the financial year. So if we are talking about invoice received on 1st April 2020, the due date is 30th September. If I am receiving the invoice on 31st March 2021, even then the due date is 30th September only. So that means I get the time which is 6 months from the end of the financial year, right? Capital goods, additional condition which is given is I should not have claimed depreciation under the income tax law. Okay. Now when should I reverse the credit? If I'm not using it for the purpose of business. Like if I'm a proprietor, I'm selling mobile phones. One of the mobile phones which I'd purchased, which I'd bought for my office, I'm using it for personal purposes. Okay. Or if I'm a dealer in t-shirts, one of the t-shirt I wore personally, which is drawings, then it is for other than business purposes, I will not get the credit. If I'm using both services or goods for both taxable purposes as well as exempt purposes, even then to the extent of exempt, I will not get the credit, right? Then if I am purchasing any inputs or input services which are blocked under section 17 subsection 5, which is motor vehicle, rent a cab, health and life insurance, works contract. If my input is works contract, output is renting of movable property like construction of a hotel, I will not get credit. But if I'm a Shoba developer, input is works contract, output is constructed apartments, then I will get the credit, right? If I'm constructing something for plant and machinery, then it is not immobile property, I will get the credit. But food outdoor catering, beauty treatment, health and cosmetic surgery, which is more of a personal nature, I will not get credit of that. Travel benefits to employees. Say I have a LTA policy, leave travel allowance policy, where I reimburse the cost to the employees. The travel cost on the GST is charged by the vendor. I will not get the credit. But if it is business travel of the employees, which is not on vacation, I will get the credit. Right? Membership of club, like Bangalore club or health centers. Okay, I will not get the credit. If somebody is charging me tax under composition scheme, he should not charge tax. But by mistake, if he is charged, even then I will not be able to take the credit. Okay, goods lost, stolen, destroyed by fire, or disposed of by way of gift or free sample. That means I have given it without any output. All of these four, if you observe, I have given it without any output. I will not be entitled to take any credit. Now, what do you mean by exempt supplies for the purpose of Section 17? It is nil rated supplies, wholly exempt under Section 11, non-taxable supplies like alcohol. If I am providing RCM services where somebody else is paying taxes under reverse charge mechanism, securities, if I have sold any shares, 1% of the selling price will be treated as exempt turnover, land and sale of building. All these will be treated as exempt supplies for the purpose of determining how much is the credit available to me. Okay, registration, again three sections, section 22, section 23, section 24. Now what does section 22 say? That the person who is liable to pay tax is a person whose turnover exceeds 20 lakh rupees. Okay, but section 23 says that even if your turnover is more than 20 lakhs, but if you are dealing only in exempt products, then you are not required to pay tax. Or if you are dealing in those products or services which are wholly liable to be paid under reverse charge mechanism, you are not required to get registered. So section 23 overrides section 22. Even if your turnover is 5 crore, but everything is exempt, you are not required to register. But if your turnover is 5 crores, 5 lakh is taxable, then you don't get an exemption under 23. You come back to section 22 and you will have to pay the taxes. Next, very quickly, compulsory registration. So irrespective of even if your turnover is less than 20 lakh rupees, in these cases, you will have to get registered. Interstate supplies, but exemption has been given to services and handicraft. That means interstate supply even of 1 rupee for goods, I have to 100% get registered. But interstate supply of services, I am not required to register because the exemption has been given. If I am a casual taxable person or a non-resident taxable person, compulsory registration is required to be taken. OIDR not relevant for us. If I am required to pay taxes under reverse charge mechanism, I am receiving services from a lawyer, then I am required to pay tax under reverse charge mechanism. I will have to compulsorily get registered. Right? Notified goods and services, as of now, nothing has been notified. Required to deduct TDS, not applicable to us. ISD is not applicable to us. E-commerce is not applicable to us. Right? Next, when do I have to take separate registration? If I have a SEZ registration and I have a non-SEZ unit, then compulsorily I have to take two registration. One for SEZ, one for other than SEZ. If I have businesses in two states or more than two states, in all the states I have to take separate registration. And these are compulsory. At my option, if I have two business locations in the same state, then option that for each business location, I can take the separate registration. So in different states, mandatory, SEZ, mandatory, business location wise, it is optional, right? Now, once I've taken registration within 30 days, sorry, if there is any change, then within 30 days, I have to inform that to the officer. That is called amendment. If I don't comply with the SEZ laws, then the officer can cancel the registration. If the officer has cancelled the registration, I can apply for revocation to say, look, sorry, my mistake, I have not filed the returns. Please pardon me. I will file the returns. For that, I file a revocation, right? Quickly, let's go to the last topic and then the RCM. Valuation. Valuation is transaction value. On transaction value, I'm required to pay tax unless it is a transaction with related parties or price is not the sole consideration. Now, consideration can be monetary. That means I can get money, or it can be a gift. So I gave the mobile phone and in return, I got a new mobile phone. Plus, I paid Sangeeta Mobiles 50,000 rupees. So for Sangeeta Mobiles, they have to discharge tax on 50,000 rupees plus the old phone which I've given, right? And then what should I add? Taxes other than GST, like property tax, road tax in case of car, or any other taxes which I am paying, has to be added to the transaction value. Incidental expenses, any reimbursements will have to be added. If the supplier gives a credit period and the recipient, that is the customer, does not make the payment within the credit period, so the supplier, that is the creditor, charges any delay payment charges or interest, that interest also will be liable to tax. Any subsidies linked to the price, like in case of COVID, you would have seen lot of cases vaccines have been given at a lower cost because somebody is sponsoring it. If a subsidy is given for that sponsorship, then that subsidy has to be added to the transaction value unless it is given by the central or the state government. Now, what do we reduce from the value? It is discount on the invoice or discount post the invoice has been issued, provided there is a credit note. On deposits, Like rent is 10,000 rupees plus 10 months deposit. On the deposit, there is no GST which is applicable, right? Last topic, RCM. What I've done here is you can take a screenshot of this also. All the services which are liable to tax, okay, and who is the provider, who should be the receiver, right? Please remember all this, because provider is different in certain cases, receiver is different in certain cases. So GTA not charging 12%, that means either they are charging 5% or not charging tax. And if it is a specified person who is paying freight, RCM will be applicable. Legal services, if the receiver is business entity. Sponsorship services, only if the receiver is body corporate or partnership firm. If he is individual, no need to pay tax. Government services to business entity. Renting of movable property of government services to registered person, not to business entity. Director services to company. The most confusing and where questions can be asked are the new services, security services and renting of motor vehicle. In case of security services, service provider should be other than body corporate. Receiver should be a registered person not under the composition scheme. But in case of renting of motor vehicles, receiver should only be a body corporate, whether registered or not. So if he is LLP, then no need to pay tax under reverse charge mechanism. But when it is security services, even if it is LLP, which is registered, he will have to pay tax under reverse charge mechanism. This is what I had to share with you very quickly. I hope you have been able to follow whatever I wanted to discuss with you. All the very best to all of you. I hope to we all hope to see you very very soon after your exams. Thank you very much. All the best. Bye. Over to you, sir.
Thank you, sir. Uh, Good evening,
Thank you, sir.
friends. Let us take the first portion of the taxation law. Before that, as usual, when I start the session, I'll give some inspirational quotes. Yesterday is not ours to recover, but tomorrow is ours to win or lose. So you decide whether you want to win or not. It is within your hands. Stay positive, except two factors now, HIV and Corona. Work hard, make it happen. So first 20 minutes GST, then I don't have much time to discuss on general. 30-minute income tax is huge. So today's session is not supposed to be 40 minutes. It's supposed to be 60 minutes, maybe 5 minutes here and there, because already GST has exceeded the time by at least 6 to 7 minutes. Okay, so I may also have to accordingly increase. Then we'll have a general 2 minutes to 5 minute discussion. So my suggestion to write this taxation paper, start with MCQ. As all of you are aware, the 4 subjects in your intermediate, okay, are MCQ, has 30 marks MCQ, okay. So 4 theory papers, including this. So start with MCQ, GST as well as income tax. Don't skip any MCQ. I am stupid if I miss MCQ at inter and final level. In CA foundation, I understood because there's a negative mark. Here there is no negative mark. So why should I miss? Even if you don't, just tick and come. By mistake, you may get, who knows. Next, income tax, mainly 5 heads of income, set off, deduction and TDS. Write sections only if you know correctly. If you don't know, don't write. Maintain a good pace, the way at which Anish sir was going. Maybe I'll pick up that pace little later. Okay. So that pace is required. Okay. Because no doubt we have to cover a huge syllabus. Okay. Standard. Okay. And 3 separate booklets will be given. One is MCQ, that is income tax and GST together. Income tax separately, GST separately, you have to write. Right separate. So 3 things. One is MCQ of GS, both the subjects, income tax separately, GST separately. Suggestion, as I said, start with the MCQs. Maybe maximum 20 minutes you can spend for 30 hours. Then part your income tax for around 1.5 hour. Then maximum 1 hour for GST. So this is based on that 60-40 ratio which I'm analyzing. Okay, income tax syllabus is more 60 marks as you're aware. Okay, so that's why you need to spend a little more time on income tax. Aim at 100 out of 129. 90 plus is also good in this paper. Accounts I want 100, costing I want 100. Income tax GST, be ready. It's not complicated. I know being my student, you love income tax, etc. Fine, but still it's difficult to score. Let us accept. But 90 plus you should score. 97 we got. One of our students got 97 in income tax. Is a terrific mark. Okay, 100 in accounts is okay. Be ready for 2 to 5 marks, which may be totally unknown. It is absolutely fine. Read the question carefully. Answer accordingly. Section 10 is an exemption. Section 80 is a deduction. Don't interchange these words. Working notes are very, very important while solving numerical related. Okay, how did you get the depreciation? How do you get the 35, 80, etc.? Clearly mention the assumptions made. Whatever assumptions you have made, make a note of it. So the minimum scoring strategy, it's not maximum, minimum. Kiran, MCQ में 20 आना चाहिए. MCQ may not be as easy as you think. Minimum I'm telling 20. GST repetitive problems in theory, what Anish sir was mentioning, around 20. Then total income computation, which I'll be doing maybe for the present batch little later. Others, PGBP and salary 30 plus 70 marks aa gaya. Okay. And CS2 I had taken on the RTP session. Those are writing in November. So when I take the RTP session, you refer that also. That is also relevant for you. Do's and don'ts, as every session I say, last page, like a rough sheet, make a mention about all the questions which you want to answer, some special point section. Working notes are extremely important. Answer to the point, write correct question number. There are a lot of sub questions in this. 2 marks, 1 mark, 3 marks, etc. Take extra care and compulsorily attempt extra questions. Prati session, Prati session. Don't relax before 3 hours. If you don't know, buy from the section barrier. Unnecessary sections you cannot write. Okay. Paper, it's tough or easy. Don't bother. Don't take unnecessary chances in life. Now we'll be going through the very important provisions of taxation. Difficult job, but not impossible for Shetty sir and his students who are losing. Income tax is a tax on total income earned by NSC during the previous year chargeable tax in assessment year. The tax slabs for an individual HF, AOP, BYD, AJP, artificial juridical person, up to 2.5 lakh nil, 2.5 lakh to 5 lakh, 5%, 5 to 10 lakh, 20%, about 10 lakh, 30%. If you're a firm or local authority, 30%, domestic company, turnover based, 400 crores in the company, 25%, otherwise 30%. Foreign companies, 40%. Cooperative society, up to 10,000, nil alla, 10%. Don't say it's nil. Then every 10,000, there's an increase by 10%. Surcharge, extremely important for those individual HF, etc. Starts from 50 lakh. For everybody else, starts from 1 crore. So it is nil up to 50 lakh. Everything you talk in lakhs here, up to 1 crore, 15%, sorry, 10%. Then one above 1 crore, 15, above 2 crore, above 1 crore, but above 2 crore, but up to 5 crore, 25%, above 5 crore, 37%, highest one. Then cooperative society, etc., above 1 crore, 12%. Domestic company, above 1 crore, 7%, above 10 crore, 12%. Foreign companies, maybe this may not be relevant, but still you learn. Above 1 crore, 2%, above 10 crore, 5%, because their tax rates are high. Such a. However, surcharge for, I'll summarize it there, for individual HF, etc., on 111 year, 112 year dividend income, capital gain another, maximum is 15%. It cannot be more than that. It comes in capital gain chapter. Who is an SSC 27, who is liable to pay the tax, include representative SSC, etc. Sorry. Then previous year is defined in 234 section 3. Financial year immediately preceding the assessment year is normally 12 months. It can be less than 12 months also when you start the new business or the new source in the middle of the year. Assessment year is always 12 months. Income of the previous year is chargeable tax in assessment year. However, in the slab B, that is shipping business of a non-resident person living India permanently, etc., where they try to evade the tax, the income of the previous year is taxable in previous year itself. 231. There are 7 categories of person. Charge. Capital receipts are normally chargeable. Revenue receipts are normally not chargeable. Capital receipts are normally not chargeable. Revenue receipts are normally chargeable. 87-year rebate is for a resident individual whose income is up to 5 lakh rupees. He'll get up to 12,500. Agriculture income is defined in 2(1)(a). Rent revenue derived from an agricultural land used for agricultural purpose. Farm building in a village, it is agriculture income. In an urban land, it is not an agriculture income. It is completely exempt from tax under section 10(1). However, when you have other incomes, there is a concept called partial integration where agriculture income should be above 5,000, non-agriculture income should be above basic exemption. I mean, there is a partial integration where you have partly agriculture income and partly business income. So rubber, coffee, and tea, it is not D, tea. Rubber. So everywhere agriculture income is highest. Rubber is 65%, coffee 75%, 60%, tea is always 60%. Next, section 224 we'll discuss later. Income, important, 24th February. The person who is talking to you, the 24th February, the date of birth in the repeat code. So 224, okay, income. Next, 5, R2R, global income is taxable. Non-resident, only 2 incomes, received in India, earned in India. R but NOR is like a non-resident plus business controller profession set up in India. Now, who is a resident? Section 6. So, section 6 for individual, 182 days or more than 11 previous year, or 60 plus 365 days. There's an amendment this time. So, an individual leaving India, law continues as it is. An Indian citizen or a person of Indian origin who stays outside India comes to India on a visit and His total income excluding from foreign sources exceeding 15 lakh, then 182 days has to be substituted by 120 days. 120 days. 120 days. And section 6 within the bracket 1A also makes a similar reference. When you are not taxable outside India, you are always going to be R but NOR. Then other provisions may not be relevant except HUF, etc. Just touch it and leave it. Indian company is always resident. Foreign company, if POEM, place of effective management and control is in India. Section 9 gives a list of incomes deemed to accrue in India. Income from business connection, salary earned in India, salary for an Indian citizen who is working outside India, then interest income earned from India, royalty income, fees for technical service, etc. Next, section 222 talks about dividend. Dividend is final dividend, interim dividend, and deemed dividend. Deemed dividend is AD to the power B LRL. Distribution of assets, distribution of deposit certificate, bonus to preference shareholders, liquidation, reduction of capital, and special one 222E. You are talking about a X company which public are not substantially interested, and you give a loan to that person, that loan will be considered as a deemed dividend. 5 heads of income starting from section 15. Salary chargeable on due or received wages, whichever is earlier. 16 gives 3 reductions. 16 1A, 50,000 rupees including for pension. 16 2, entertainment allowance is first added. Deduction only for government employee, maximum 5,000. 16 3, professional tax borne by employer, add and deduct. Borne by employee, just to deduct. 17 gives the definition. 17.1 salary includes anything received from the employer. Wages, annuity, pension, whatever you receive is income. 17.2 is important. Perquisites. RFA, rent-free accommodation given to the concessional. Then any amenity benefit given to the specified employee. Specified employee means direct employee, an employee having 20% or more substantial interest or monetary salary before deduction of section 16 exceed 50,000 per annum. So in that case, what are the 5 perquisites which are taxable? So motor car, CS get, car, sweeper, gas, electricity, etc., education, etc., transport facility. Okay, so they are additionally taxable. Then one special amendment this year is a compulsory question for those who are writing July and November. 17.7 says, okay, if you contribute anything to RPF, ETCCD pension and approved superannuation fund above 7.5 lakh, extra amount is taxable. Let's say 10 lakh is contributed, 2.5 lakh is taxable. Interest on 2.5 lakh is also taxable. This is an amendment of 2020. Next, 17 subsection 3, profits in lieu of salary, compensation, etc. received for termination. Then 3 important exemption, 1010, 1010A and 1010A. Gratuity, commutation of pension and EL received by the government employee fully exempt at the time of retirement or after retirement, whereas if it is received by non-government, if it is a gratuity covered by POGA, non-covered by POGA. So 15 days and half months with the 20 lakh limit. Commuted pension, if you also receive gratuity, 1/3 of the full value, point to be noted, don't receive half of the full value. Encashment of earned leave, whatever the earned leave into average salary, and maximum limit of 3 lakh rupees, and extra point is average salary into 10 times. Allowances are of 2 types. HRA, any employee, government or non-government, okay, least of the following is exempt. Rent paid minus 10% of salary, actual HR received 40% or 40% depending on where you reside. Bombay, Calcutta, Delhi, Madras. If you reside in Pune, employment in Mumbai, 40%. If you reside in Mumbai, it is 50%. Next, 1014 gives a list of other allowances. Official allowance, CT Hardu, unspent amount is taxable, conveyance, travel, etc. Personal allowance, whatever is prescribed is exempted. VRS compensation 5 lakh is exempt. LTC twice in a block of 4 years is exempt. Those are writing now. 2018 to 21 is your block. 1st January is a calendar year. 1st January 18 to 31st December 21 is the block you have to remember. Next, house property. 22 is the charging. 23 is the annual value. House properties are categorized into 2. Let out and DLOP. Then 23 2 properties. 23 2 properties, there can be 2 properties which are used for self-occupation or property in Shirsi which I could not occupy because of BEP in Bangalore. Business, employment or profession elsewhere. 2 properties nil. Whereas let out property, MRV or FRV, whichever is higher, that figure will stand and whichever is less, then compare with the ARR minus unrelated, whichever is higher. Then vacancy allowance has to be given only if E is equal to D. And if you're a real estate businessman, for 2 years from the end of the financial year in which the construction is done, house property value will be nil. Under house property, there are 1+2 reductions. Only for LOP, municipal tax actually paid by owner anywhere in the world is deducted. In addition to that, 30% of the NAV as well as any interest is allowed. Whereas 23(2) property, for both two properties, maximum reduction of 2 lakh rupees. If the property was constructed within 5 years from that year in which you have taken the loan, 5 years is there, 3 years in the 5 years increase and only for AC, acquisition and construction. Next comes here PGBP. Business income. Business is defined in 213. Trade, commerce. Profession includes a vocation. Definition of plant is important. So I said any tangible asset other than building, machinery, furniture is called plant. That's it. So then WDV, you have to calculate always at the end of the year, at the beginning plus addition minus sale value. That's called WDV. Depreciation is an important section. Easy to remember. What is section 32? We have teeth 32. So over a period of time, it gets depreciated. So SLM is an option given to power generating undertaking. If they want, they can follow. If they don't want, they can always come under WDV. And SLM, whatever the cost in the appendix 1A, if the SLM asset is sold at a loss, it is called terminal depreciation, 3213. At a profit, up to the original cost, it is a balancing charge, business income. Anything over and above that is called capital gain. WDV is applicable to every SSC based on the WDV as on 31st March. Simply open in WDV, add addition, less sale value, or insurance money received for complete destruction. Whatever the WDV, 2 RMRs. Use it for less than 100 days, half. More than 100 days, full depreciation. 32(1)(2)A is an additional depreciation only for manufacturing concern for absolutely new plant and machinery at the rate 20%. Where if the asset is used for less than 100 days, balance 10% available next year. Till last year, 35% was given for ABTW, that is not there. So Andhra Pradesh, Bihar, etc. Now it is only 20%. Same way, scientific research, any revenue expenditure, any capital expenditure, any donation, now onwards only 100% allowed. Land is never allowed as a deduction. 35 AD, 14 businesses, okay, except LGF, okay, capital expenditure is fully allowed. Unabsorbed, if any, can be carried forward for any number of years. All 35D sessions, 150 will be allowed. 37(1), the any expenditure which is not covered at 30236, if 5 conditions are satisfied, it is not a personal expenditure, not a capital expenditure, not covered at 30236, incurred for the business is fully allowed. Penalties which are against the law not allowed. Compensatory penalties allowed. CSR expenditure shall not be allowed. Next, 30 to 37(1) is the deduction. 40 and 40 capital A, no deduction. If you don't do the TDS to the non-resident, 100% disallowed. To the resident, 30% disallowed. 40 capital A subsection 2 says, very important, compulsory question. If you are making a payment relative, Harika and Vikas both are my employees. Vikas is not my relative, Harika is my relative. Both are equally qualified. If I pay 2 lakh extra to Harika, extra paid unreasonable amount is disallowed. And very important, wherever we go, this 10,000 cash payment comes. About 10,000 in a day to a person. If you pay, otherwise than by account pay, check, draft or ECS, the entire expenditure is disallowed. Now look at this. I'm a Shetty sir, Panbida business. I purchased the machinery by paying 12,000 cash. I cannot claim depreciation on that. I paid salary to Vikas, okay, 12,000 cash. The 12,000 expenditure is disallowed. The 10,000 limit has been increased to 35,000 rupees if you are making for goods carriage vehicle, lorry, etc. 40 small b, if you are a partnership firm, if you are a PFAS and if you are satisfying the condition, interest on any amount, very important. Partner gives loan, capital, advance, whatever, maximum 12% is allowed. And remuneration is allowed only to the working partner up to 3 lakh. 90% of the book profit, 1.5 lakh, whichever is higher, on the balance book profit, it's a 60%. Now, there are some special provisions. When is the tax audit applicable? Normally, for business above 1 crore applicable, and for the professional above 50 lakh, there is small printing mistake here, rupees 5 lakh, rupees 50 lakh. There's a correction to be done. Okay, 50 lakh. Whereas, if you are a pure digital economy, where they say your total receipts into 5%, cash receipt is less than 5% of the total receipt, and cash payments are less than 5% of the total payment. That means everything you are doing in a digital economy, that check, etc. Then the tax limit is 5 crores. Okay. Next one is you are a professional having turnover below 50 lakh rupees. Then the law says you don't have to go for what? You don't have to go for tax rate, but it offer minimum 50% of the income. 44 AD says if you are a business entity being a resident individual HF firm excluding LLP, you have to offer 8% normally, but if you are collecting the money through digital mode like check, ECS, etc., within 139.1, you can offer only 6%. That should be enough. Next, 44 AE, goods carriage vehicle, you have lorry, tempo, etc. Big vehicle, 1000 per ton per gross weight per month, whereas small vehicle, 7,500 per month. Those who are not studied all this earlier, you may not understand much. Just listen. That's okay. When at least when you're going to listen, you will understand. Capital gain, two important conditions. Transfer plus capital asset is equal to capital gain. So two important conditions. So what is capital asset? Any security held by FII or any property held by others other than stock in trade, personal effects, non-urban agricultural land. Agricultural land in a village doesn't give any taxable income. Agricultural land in urban area, if you sell it, it's capital gain. Take care of it. 247. What is transfer? I said transfer plus capital asset. Sale, exchange, extinguishment, etc. is called transfer. Sale is a transfer. Exchange is a transfer. Giving up is a transfer. Now, what is short-term capital asset? Okay, that comes a little later. How do you compute the capital gain? A simple one. I purchased this building for 100 lakh, sold at 500 lakh. 500 and commission I paid 10 lakh. 500 minus 10 is 490 minus 100 lakh. 390 lakh is going to be my capital gain. That's it. However, if it's a long-term capital asset, you need to do the indexation. You have to buy hard this indexation. 2001 to previous year it is 100 and your examination July 21 and November 21, previous year 2021 it is going to be 301 lakh. Okay, fine. Then exemptions are given. 54 says long-term residential house property, you sell the same Shravya and invest in another residential house property, you get an exemption. 54B says B for Bhumi, Bhumi agricultural land, Bhumi Kalla agricultural land. If you sell agricultural land and what? Invest in another agricultural land, you get an exemption. 54D land, building, industrial undertaking. Okay, if that is taken over compulsorily, there is an exemption. D for land, building. Okay, next 54F. Sell long-term capital asset, invest the net sale consideration in RHP. 54EC is any long-term capital gain on LBB, land, building or both. Invest in 4 bonds, National Highway bonds, RECL, Power Finance Corporation, IRCL, RFCL, then 50 lakh rupees exemption under 54EC. Taxation, long-term capital gain is normally taxed at 20%, equity shares, etc. are taxed at 10% next of 1 lakh, whereas short-term capital gain of equity shares is 15%. Normal short-term capital gain is a normal income. Next one is income from other source. 56 subsection 1 says any income not taxed earlier will come here. 56.2 says dividend, casual income, gift income, all these are always under income from other source. Deductions, pension, you get 50,000 rupee deduction. Family pension, 1/3 or 15,000, 15, 15, 15,000 deduction. Okay. Then all the reductions of business income are applicable here. Fine. One amendment last year, dividend income from mutual funds, units, etc. You get reduction only of 20% of such income. Is to 20% of such income. Gift income, 3 categories of gifts. Cash gift above 50,000, land, building or both. Stamp value minus Z above 50,000. Then any other specified asset, B Z pass, bullion, jewelry, archaeological collection, drawing, painting, work of art, shares and securities. Anyhow, it will be available on the YouTube. If you have missed it, again you can go through and connect it. Some of my new friends. Okay, fair market value minus Z above 50,000 is taxable. In LPB, there are 2 extra conditions. One is 50C, stamp value or actual sale value, whichever is higher, make a reference to the valuation officer, whichever is less, but minimum actual sale value. Nirisha smile. And there's a 110% condition. What is 110% condition? Now, actual sale value is 100 lakh. Stamp value up to 110 lakh. If it is more than 110%, you have to consider the same. And date of agreement and stamp duty, that also be considered. Next comes clubbing. What's clubbing? Suppose you try to evade the tax, okay, others income, that will be clubbed in your hand. Like that one case, the minus income will be clubbed in the hands of the parent. Next, 68 to 69D, CME plus H. CME or CME Grewala, cash credit, investments, unexplained. So department comes to your house for coffee, tea, and they find jewelry, etc. You don't have an explanation. You say, be. All these items, tax under 115, be. Okay, at 60% flat. They are basically Shivaji the boss. black money. Okay. Next, 70 to 80 talks about set off and carry forward. Unabsorbed allowances, 32 to 35 for 32 is depreciation, 35 for is capital expenditure under 35(1)(4), and 31 is family planning only for company. It can be carried forward for any number of years, adjusted against any income. Whereas all other losses normally you can carry forward for 8 years, except two immoral but legal. Speculation loss and race can be carried forward only for 4 years. Deductions under chapter 6A. Remember the section and amount. That's it. Don't go beyond that. ATC investment, etc. 1.5 lakh. ATCCD 10%, but employer contribution no limit of 1.5 lakh. ATD D for disease, where you take a mediclaim, 25,000 normally. For the parents, you can take 25,000, that is mediclaim. If any one of your senior citizen, you'll get 50,000. It can be 25,000 plus 25,000. 25. I am 32. My father is 62. So 25 plus 50. I am 62. My father is 95. 50 plus 50 you can take, including preventive health checkup, which can be paid by cash up to 5,000 rupees. DD, disabled dependent, DD, 75,000 normally, 1,25,000 rupees if it is a severe disability, flat deduction. DDB, B for Bimari, that is a disease if you have, maintenance, then 40,000 normally, 1 lakh rupees senior citizen. ATE for educational loan, higher education loan is taken, then interest will be allowed for yourself or the relative for the current year plus 7 years, totally 8 years. ATEA, amendment, again, my friends were writing July and November. If the loan is taken in 19 to 21, 2 years only, and you are constructing a small house, 45 lakh, you will extra get a 1.5 lakh rupees deduction. ATEEB, if you are acquiring loan for electric vehicle, because electrical vehicles save energy, save environment. If you have taken the loan between 19 to 23, you will get to 1.5 lakh rupees again deduction. Easy to remember. So it is ATEA 50,000, 50,000, 50,000, 1.5 lakh, 50,000, 50,000, 50,000. 3 alphabets, 50,000 into 3 anta. ATG, when you give donation, so there are some donations where you get 100%. National Relief Fund, PM Cares Fund, Swachh Bharat Kosh, Clean Ganga Yojana. Then there are some Nehru family, Jawaharlal Nehru family Trust, Indira Gandhi Foundation, then Rajiv Gandhi Foundation. All these are only 50%, and PM Drought. Okay. Then there is Indian Olympic Association, etc. 100%. CAPS Foundation, etc. You'll get a 50% reduction. Donation has to be in other than cash. Up to 2,000 you can pay by cash. ATGG. Now I'm staying in a rented house. I'm an employee of Vikas. I pay rent, then 1013A exemption. But I'm not an employee. I'm a self-employed. I'm having my own office, but still I'm staying in rented house. The deduction is under ATGG. Similar. Rent paid minus 10% of total income, 25% of total income, 5,000 per month. Then QQB, RRB, 3 alphabets. Authors and patents, 3 lakh is the deduction. QQB, RRB, 3 alphabets, 3 lakh. ATU, now Mr. X himself is a disabled person. With due respect to our Rajiv sir, he is totally blind. He'll get 1,25,000. If he takes care of someone else, under ATDD, okay, he can get a deduction. Fine. ATTTA for SB interest, deduction up to 10,000 rupees. You are a senior citizen, ATTTB, B for Buddha, okay, or Buddhi. So you'll get for SB interest or FD interest up to 50,000. Next, you have SCZ. What is SCZ? Special exploitation zone, special economic zone. Then the law says, whatever the profit you made, first 5 years, 100% reduction, next 5 years, 50%, last 5 years, totally 15 years, 50% of reserve period, whichever is less. Next, assessment procedure. Everyone must file the return. If you are a company and firm or partnership firm, 31st October is the due date. If you are a transfer pricing is 30th November, everybody else is 31st July. Only if your gross total income is about 2.5 lakh. Apart from that, these import for MCQ, take care. You are not filed normal return. You're not liable to file the return, Suma, but you deposited 1 crore or more in current account. Incurred foreign travel expense about 2 lakh. Incurred electricity expense above 1 lakh. That means you are a big fellow, file the return. Next, 139.3 LOS, loose language, the loss return. You must file the loss return within the due date. Otherwise, you cannot carry for the losses. But however, 71B, house property and all allowances, even if you don't file within the due date, you can carry forward. Next, 140, who should sign? Individual, himself or power of attorney. Karta, in the case of a company, MD, etc. 140A is the self-assessment tax. Next, TDS. 40, this is important amendment on the top. 14th May to 31st March 2021. TDS has been reduced by 25% because of the unfortunate corona. except on salary and only to resident. Non-resident, no relaxation. So you need to remember the section and amount. 192 salary based on your salary structure. Interest other than whatever securities 10%. Interest normally 40,000 rupees. When a banking company pays 50,000 rupees when they pay to senior citizen, 5,000 others. Okay. Lottery about 10,000, 30%. Contract 184C contract above 1 lakh in total or 30,000 rupees per bill. Normally individual HF 1%, for other cities 2%. 184 IA purchase of an immovable property above 50 lakh rupees other than agricultural land above 50 lakh rupees, you have to do 1%. 184 IB is if you don't come under 184 I normal rent and you are paying above 50,000 rupees rent, you should do the TDS at 5%. JDA, Joint Development Agreement of Individual and HF, 10% the TDS. 184 I said land, building or both 10%, machinery plant 2%. 184J has 5 items. Professional fees, fees for technical service, then director's remuneration other than what is covered in the salary chapter, then non-competing fees. So each one of them, they have 30,000 limit, but for director fees, no limit. Be careful. That means professional fees I paid 32,000, there's a TDS. Director's fees I paid 12,000, there's a TDS. And normally 10%, but payment to call center, any FTS, royalty related to the films amendment, it is only 2%. Then 184M, payment to contract who are not covered under the previous sections, above 50 lakh if you pay 5%. 184N, Nanna Kasu, Nanu withdraw Marta. 184N, somewhere there is connection. Okay. Above 1 crore if you are withdrawing from 1st July 2020 on the entire amount you have to pay, do 2% TDS from the bank, post office, etc. Next. Advance tax. Who has to pay advance tax? That is the tax in the previous year itself. So advance tax has to be paid. If your tax is 10,000 or more, MCQ careful, 10,000 or more, SSC liable to pay the tax. However, not liable if resident senior citizen who has no business income, not required. 211. Okay. How much is the advance tax? Very easy. Each quarter, starting from June 15th, 15% plus 3 months, add 30%, plus 3 months, add 30%. So 15th June, September 15th, December 15th, 15 plus 30, 45 plus 30, 75 plus 30, 105. See, 105 inch it is only 100%. Arthak idea. But if you are a 44 AD and 44 ADDA case, only one installment. If you are declared income under 44 AD and 44 ADDA, 15th March 100%. Next, interest provisions. 234A. Simple interest 1% per month. Okay, if you file your return late. 234B says before 31st March you should pay 90%. If you delay, again 1% per month. 234C, I told you to pay this installment. If you don't pay, on the shortfall you have to pay 1%. But on special point is, in first case if you have paid about 12%, second case if you have paid about 36%, no interest at all. No interest at all. 234D, department has given you excess refund. On that, you have to pay again 0.5% interest. 234E, if you delay in filing TDS return, 200 rupees fees. 234F, very important. Apart from interest, if you file your return delayed, okay, up to 31st December of AY, it is 5,000 rupees. If it is beyond that, 10,000. However, if you are a small fellow, your total income is less than 5 lakh rupees, sir, there is the fees is only 1,000 rupees. This covers your basic provision. Special provisions. If I consider this as ABCD, lottery income ke yaude benefit sigodilla, kuch bhi nahi milta hai. 111 and 112 ge no C, there is no chapter 60 reduction. 112 ge C nu sigodilla, D nu sigodilla. For everybody else, ABCD available. 224 income includes profits and gains, dividend, casual income, gift income. List of expenses disallowed. Go through it. In the business income, scientific research expenditure on even present batch you should be able to understand now. On land, in-house R&D 35, land and building both are disallowed. Personal expenditure disallowed. Capital expenditure disallowed. Compensatory penalty allowed, but other penalties are not allowed. Payment to non-resident without TDS 100%, resident 30%. Donations disallowed. Unreasonable payment relatives disallowed. Cash payment in excess of 10,000 rupees disallowed. Expense 43B. B looks like 8, no? 8 items. If you don't pay within due date, it is a disallowed. Provisions, political party journal, etc. disallowed. Types of capital asset, short term, long term. What is long term other than short term? Short term is what is held for less than equal to 36 months. Loser. Loser. Listed securities, units of UTI, units of mutual fund, zero coupon bond up to 12 months. Now, my friends, sir, I have not understood. Again, YouTube will be it's available. Go back and see again. You can obviously record. So for them, it's only 12 months. Whereas unlisted shares and land, building or both, it is a 24 months. Exemptions, I've already told you. 54 BDG, Bombay, Delhi, Go or Goa. You can go and say that for short or long. That's the exemption for short term or long term. Other sections only for long term. 54 is residential house property. B is for Bhumi, agricultural land. GB may not be there in your syllabus. 54F residential property. All these are for individual HF. Others can be for individual HF company. Investment is capital gain. In these two sections, it should be NSC. Exemption, capital gain or investment, whichever is less. Time limit, 54 and 54F same. 1 year before or 2 years after. 54B, illinda tegiri, next point, 2 years. 54D, next illinda tegiri, 3 years. 54G, 1 year and 3 years, permutation and combination. 54EC only 6 months. 54GB not there. Capital gain account scheme is applicable everywhere except 54EC and 54GB. Surcharge, this is a special point I said. On individual HF for 111 income, 112 is short-term capital gain and equity share UIF unit, 112 is long-term, and dividend income maximum is 15%. Next, ICDS, glance it is based on account starts. Now AS 1 and 2, same ICDS 1 and 2. But directly 7 to 13, consecutive number 3 to 8. Then 16 is 9. Last AS is 29. Last ICDS 10. ICDS 10. So that's the way you should remember. Fair enough. So some of our friends would have missed the budget. It is not actually to be a part of this discussion, but budget 2020, huge amendment. So I thought I'll spend 5 minutes extra on this. Okay. Section 6. So there's an amendment in section 6. Individual. So 182 days exception. When you're going, there is no exception. When you're coming to India, instead of 182 days, so 120 days is substituted. Next, section 6(1)(a). If you are an Indian citizen, person of Indian origin in India, if you are not having any foreign taxable income and your total income in India is above 15 lakh rupees, you are always deemed to be resident but not ordinary resident. 9(1) may not be relevant. Now onwards, from your examination, from 1/4/2020, dividend, there is no DDT in the hands of company. That's why dividend is fully taxable in the hands of shareholder. 1034 not applicable. Then this I discussed. 35(1)(a), scientific research association, etc. They have to submit a certificate document to the donor, as well as they have to file a statement to the department. Tax limit, I said 5 crore rupees. If cumulative conditions are satisfied, important amendment people take care. Okay, especially July 21 and November 21. If your cash receipts are less than 5% of the total receipts, cash payments are less than 5% total, then instead of 1 crore, your tax limit is 5 crore. Intercorporate dividend received from a domestic company or a foreign company or a business trust shall be reduced from dividend distributed. So assuming A Limited distributes dividend up to 139 dividend 20 lakh, but if it has received 4 lakh dividend from a domestic company, etc., its the income will be 20 lakh minus 4 lakh. To that extent, there is a deduction. 115 BS is a very important section, only for individual HF. It is not for BOL, only individual HF. If they want to opt, either they can go for normal tax, atava by foregoing certain benefits like LTC, all deductions under salary, interest on housing loan, some of the benefits are 32(1)(a), additional depreciation, etc. Then they have a beautiful provision called 2.5 lakh nil. Every 2.5 lakh increase, 5% tax. 2.5 lakh nil, 2.5 lakh to 5 lakh, 5%, 5 lakh to 7.5 lakh, 10%. So like that. So up to 15 lakh it goes up. Above 15 lakh it will be 30%. It is an option. Now, if you're a business SSC, once you opt, you cannot come out. If you come out, you cannot get inside. Whereas other than business SSCs, every year you can go inside and come out. Every year you can go ahead and come out. That is 115 BAC. 115 BAD is a cooperative society. Okay. If you're a resident, instead of going by that provision, you can go by 22%. Okay. Once you opt for 115 BAC and 115 BAD, you don't have to pay AMT. AMT is alternate minimum tax applicable to non-corporate syllabus of intermediate. Compute the normal income, compute the total income, whatever you compute. On that, add back chapter 6 CAC, income based deduction, 35 AD minus section 32, then 10 AA. So normal income tax you compute. On this adjusted total income, apply 18.5%, whichever is higher. Let us say normal tax comes to 40 lakh, whereas adjusted total income at 18.5% comes to 50 lakh. The 40 or 50, whichever is higher, is 50 lakh. You have to pay 50 lakh here. You have paid 10 lakh extra. The 10 lakh can be carried forward for next 15 years. That is called AMT. That's called AMT. Okay, fair enough. Next. Yeah. So next is 43CA. This I already told you. up to 110% now. 5% under 105%. Now they increased that up to 110%. 80 EA extended up to 21. I said 35 AD is now optional section. Then work includes all this manufacturing supply related work. Next 184O. Okay, the new section TDS on e-commerce transaction. So whenever there's a payment in excess of 5 lakh rupees, there's a 1% TDS. 119A, the department says we introduce taxpayers charter. The CBDT, Central Board of Directors, the direct taxes, will be making one charter which gives the details of the taxpayers. So that's about it. Okay, about what income tax. The last portion. Yeah. This is what Harish sir has covered up to here, I hope. Okay, fine. So I completed actually as per my schedule. Okay, but nevertheless, okay. So another 5 minutes. So July 21. Total question paper is for 129 marks. Part A will be income tax, 56 marks. Part B is GST, 43, and MCQ for 30 marks. So income tax is for 74 marks, out of which 18 marks are MCQ, and the question pattern is GST is for 55 marks, out of which 12 marks is MCQ. Okay, that's the pattern, and it is basically income tax is 60% and indirect tax is a 40% weightage. Okay, fair enough. And they'll be giving 3 papers, I said. Saptapadi steps for success. Start with the MCQ, I said, then income tax, then part B, GST. First, read and make the best notes for GST, 40 marks by reading exhaustively 80 pages. Then read the latest amendment from RTP, extremely important. Those are writing in July 21. Use common sense and write the answer when you're not sure. Don't write wrong sections and case law. Question may vary from 2 marks to 4 marks. Small projects to be kept in. It is not very easy, but certainly not tough paper after listening to Shetty sir now. Okay, so if you're reasonably prepared well. Important topics, you can obviously go through. Everything is important, but these are the important heads of income, deductions under various heads. The residential status compulsory question this time. Gift income compulsory question. 6391 10 AA. Salary computation, HRA computation, house property computation, business income. These are the special provisions. Capital gains. These are the special provisions. Deductions, etc. AMT provisions are also important. Next, indirect taxes. Everything is important, but charge, levy, time and value supply, registration, ITC, reverse charge mechanism, okay, types of units, etc. are extremely important. Last 2 exams, Jan 21 cycle 2. So income tax is 70 marks income tax I'm talking about, 70 marks, okay, where 70% weightage is given, okay, in that there's a choice, okay. So computation of total income and tax payable, TDS, in 70% it is, okay, 70% because 30% is MCQ. Then TDS implication question, TDS, then AMT, then taxable income, sections 9, etc. Total income, house property. Next, indirect taxes, again tax liability, taxable, particular tax, computation of tax again, GST computation, etc. Almost similar question. You look at it. Problem on TDS implication, problem on TDS implication. Total income, almost similar questions. Please go through 2-3 questions before you go to the exam hall. Whenever you find yourself doubting how far you can go, just remember how far you have come. Remember everything you have faced, all the battles you have won till date, and all the fears you have overcome. So, God has a plan, trust it, live it, and enjoy it. There's a statement which says, if it works as per your plan, well and good, be happy. If it doesn't work as per your plan, glad God has a different plan. So, I'm sure we are not above the God. So, please go ahead as per him. So, this is a requirement. Anybody wants this, what's PDF will be sharing. Anybody wants, you can send a hi to this number 83102 with a message. We'll give you the PDF. And also, this area will not be discussing. Okay. Share screen actor, yeah. Is it getting shared? TDS? Okay. So we have also made a beautiful TDS related summary around 65 points. Okay. I'll not be going through. This has been shared to the present batch students in the today's group actually. And beautiful. Just glance it. Maybe half an hour you may spend on this. It will definitely give you around 10 to 12 marks. Okay. Directly and indirectly. Beautiful provisions. Please go through. Okay. So any general questions anybody has? I'm still within the time. My plan was actually up to 8:25, but Anish sir extended by I think 7 minutes. So I'm still having 1 minute. Okay. I said 9 o'clock, but sir has extended. Okay, because 5 minutes extra on the general point I discussed. I'm still within time. And more happy because the entire income tax we have covered. Okay, just in that point. Any general point? Okay, fine. So next again, so we'll be starting with the second group from Monday. Okay, so I'll be taking advanced accounting. Okay, on Monday. So attend all the sessions. So you will enjoy. So including YouTube viewers, all the best.